Welcome back to Market on Close. Time for Options Corner. Kevin Green is here with the levels he's watching into the close. All right, Kevin, we have 30 minutes to go before that closing bell. Sounds like maybe some new levels to talk about because we're way off the 5,600, 5,630, 5,640 levels that we've been talking about.
Yeah, now we have cracked through the 5,700, and that's actually a really big milestone here. We're only a couple of points, maybe about 30 points away from the 20-period moving average or 200-period moving average for the S&P 500. So we're getting fairly close, around 40 points. My apologies, getting fairly close. But going into the close, what do you want to see? 5720 is going to be kind of that first layer or that area of potential resistance here. A lot of activity there, especially early on in today's session. You are seeing maybe some opportunity here to try to break through that and get to 5750. Could it be possible? Maybe we do see a squeeze, but we also have some pen risk sitting at 5700 here. Any type of further breakdown or any type of breakdown to the downside here, area that I'm looking at is around 5660, and that's right below, right above that negative pressure area where you see a lot of negative positioning here for the market. But overall, we actually look pretty decent. We did set up a little bit of a head and shoulders pattern. It's a little bit lopsided there over the last 15, 20 minutes or so, but we were able to break above that. But we do have that neckline to be mindful of. If we kind of break through 5680, maybe it becomes a little bit of a concern, but right now seems like we're holding up. You would like to see that market on close order number really coming in fairly aggressive on the buy side to try to get you that rip higher, but 5720, 5725 could be in the cards for the close here today, Caroline.
Okay, not quite there yet. We're at 5706, but we'll keep our eyes on that in the final 30 or 28 minutes of trading. I know you're also watching gold and silver. No flight to safety today. Both are lower.
Both are lower, but silver is actually still relatively outperforming gold. And this is something that I brought up earlier this week and even last week. So I like to do a little bit of a check back for this chart here. You're starting to see more of a consolidation or potential reversal pattern when it comes to this gold to silver ratio compared to the S&P 500. When you kind of go and look at the past here, this has been a really good indicator as far as overall bullishness or risk on in the marketplace. When you have silver outperforming, it doesn't mean silver has to go up. It just means that it has to do better or fare better than gold does. Silver is more of a economic growth type of metal, if you will. Also has precious metal properties here, but mostly it's utilized for economic growth as an indicator there. So we are starting to see that hinge. You could even say that's a little bit of a head and shoulders pattern if you're looking at that orange line there. And if we do see a little bit of a breakdown, I think that also coincides with the S&P 500 moving higher. We also are kind of looking at the S&P 500 weekly chart. I think it's really important for us to kind of touch on this today because of the moves that we have seen to the upside. The CCI has actually now crossed that momentum line or that zero line for the S&P 500, and that is generally bullish. And when you kind of look in the past, anytime that we've had a consolidation of the downside, a break above that momentum line or that zero line for CCI for the S&P 500, we do generally see a continuation of at least 3 to 4 weeks of positive gains for the S&P 500. Even if you go back and look at 2022, where we had a break above that momentum line back in July or so, yes, we did make new lows eventually, but even crossing that momentum line, it also coincided with around 3 to 4 weeks of positive gains for the S&P 500. MACD is also hinging and looks like it wants to cross here in the next week or 2 weeks. That's also bullish. So the daily chart did show maybe some fracturing here when it came to the market because of the stalling out over the last couple of trading sessions, minus yesterday, last couple of trading sessions here. But the weekly charts still are holding up for the most part to signify that, hey, maybe we do have a little bit of a pullback, but the traditional trend or the trend right now, primary trend, especially with that CCI indicator, is kind of pointing towards a continuation for this market to the upside right now.
Okay, so could be a good few weeks. Kevin, can we gauge anything about potentially the longer term and what that could look like based on these technical levels?
I mean, obviously there's a lot that can actually happen here. It seems like the market is really going to discount or has been really discounting the economic effects of tariff policy. And we probably won't see any impacts for another couple of months here. If that's going to be the case and the hard data still holds up or shows relative strength for the economy as a whole here, the market once again may discount that. So if you're looking at this right now, barring any type of major economic slowdown over the next 3 to 4 months, which remains to be seen. Technically, you're saying that yes, we've seen the bottom. We are making gains to the upside here, and this kind of tells you that I would not be surprised if we do try to test those all-time high levels in the next couple of months. At this rate, we could be testing the all-time highs the next 3-4 weeks. The next couple of months, this chart is saying that could be a possibility, especially when you get that MACD cross at the bottom there. Once that cross actually does occur, that's an algorithmic trigger as well for those that are actually programmed for that MACD. But that's also a trigger for buyers to really step in here.
Okay, in the next couple weeks, if we start to see a sell-off, I'm going to say, but you said, just kidding.
Well, if you want if you want the market to go down, I can be bullish. If you want the market to go up, I'll be bearish for you. So I'll still say be cautious. I would still be cautious because of the economic data, but the technicals obviously say otherwise. And we follow the charts and we follow the data, right, Caroline?
Yeah, we do. All right, and I follow what you tell me here. Tell us what else is on your radar heading into the close.
Yeah, last thing I will say, okay, if you want me to give a little bit of a bearish sentiment, VVIX, so we're looking at the vol of volatility, right? And if you're kind of looking at that metric, this is measuring volatility of the VIX index itself. We are actually getting to, let's say, the levels that we were at before Liberation Day, right? We are seeing a normalization for vol of vol. Now, volatility, if you're looking at the VIX itself, still a little bit elevated here, but vol of vol has come down. Two things, that is bullish, but we are getting to a level here where I would, it's fairly cheap to actually buy out of the money protection if you're utilizing VIX options, because we are actually below the 1 standard deviation average or range for the VVIX over the last year. Usually once we get to these closer or these depressed levels or these low levels here, it's easier to actually ratchet that back up to the upside because it's a exponentially, it's an exponential oscillator, if you will. So for the most part, that has been bullish, and it is bullish. But once we get to these extreme levels for the VVIX, you start talking about that 90 level, probably would be interesting to try to maybe buy some volatility protection at that point because we're getting close to those low levels.
Okay, not the first time I've heard that this week. Kevin Green, thanks so much.